As we told you earlier, stocks closed with losses today as wide-ranging concerns about the sturdiness of the economy drove a broad sell-off on Wall Street. The Dow Jones closed with a loss of more than 600 points after being down as much as 900 earlier. The Nasdaq and the S&P also took some hits today. Joining us now to talk about this is financial analyst Dennis Brewster. Dennis, thanks for being with us this afternoon.
Oh, you're welcome, Steve.
So we mentioned the potential debt default by this massive Chinese real estate conglomerate. Financially, everything seems to be connected in this world, but why does this have such an impact on the U.S.?
I think, whether or not it's all because of that, one potential default is probably up for debate. But what isn't is the markets were really ripe for a decline. I mean, we had gone almost 11 months without even a 3% down day. And to put that in perspective, last year, we had over a dozen days that were down anywhere from 4 to 12% just, inside a month alone. So when you get an event like that, that's, obviously not a positive event and the markets are right, it just sets the perfect stage for a pretty dramatic down day.
So you feel like this was just a natural correction then?
It is. Unfortunately, they're painful. They're never fun when you're in the middle of them, but we had definitely been due, and I think it comes as no big surprise. Everybody knew that we couldn't keep going at the same pace we've been going the last, almost 12 months.
We're much better off than we were over a year ago, no doubt about that. So let's talk about some other concerns facing investors.
Sure.
We've got the Delta variant. We've got the standoff between Democrats and Republicans. So the markets were having a tough time, as you mentioned, even before today because of this. So we know the booster shots are coming. It looks like vaccines for kids are on the verge of being approved for children 5 and up. How do you think that will impact the markets?
Well, I think that's a positive because obviously the concern that, there has been some slowing because of the Delta variant. So, I think that can be acceptable, but you definitely don't want to see it go beyond that. And, heaven forbid, turn the clock back to what we went through last year. So that's definitely a big factor. The inflation news has been, difficult lately. No one knows how much of that is going to be permanent and how much it is temporary. So you've always got something that the markets are keeping their eye on, as a potential problem in the short run. And, there's no question that Delta variant is one of the bigger ones.
I know you've always talked about in the past about just being patient. This is one of these things where we just have to be patient, I'm assuming, right?
I know as many times as we've said it, and I know I can sound like a broken record, but it's hard not to let these short-term interruptions derail your longer-term plans. And they're dramatic when we're in the middle of them, especially now when you look at the Dow at 35,000, 10% correction is 3,500 points. And, that's a lot. Percentage-wise, maybe not so bad, but it's definitely going to get your attention when you turn on the TV and we're down 900 points.
It does hurt when you look at the numbers. All right, Dennis, thank you so much for clarification. We appreciate it.
Okay, thank you, Steve.